Is Las Vegas housing market finally crashing? Or is this the buying opportunity you've been waiting for? Well, the September 2025 numbers just dropped, and they're telling the story that every buyer, seller, and investor in Southern Nevada needs to hear right now. We're seeing the first year-over-year price decline in years, and inventory has exploded by over, you ready for this? 37%, and the market dynamics have completely shifted. But before you panic or celebrate, you need to understand what's happening beneath the headlines. And I'm going to take a little bit of time today and break down every number, show you the historic context, and give you the exact strategy you need, whether you're buying or selling in this market. So let's take a little bit of time and dive on in. I'm Eric Hudson, and I've been helping people navigate the Las Vegas real estate market for over a decade. Whether you're relocating for work, the military, or just chasing the sunshine, this channel is your honest guide to everything Las Vegas. No sugarcoating, just the facts you need. Let me start with the headline number that everyone is talking about, I'm sure. The median price for a single family home in Las Vegas in September was $470,000. That is down 2.1% from September of last year, when it was $479,900. This is the first year-over-year price decline that we have seen in the market in a while. And that marks a clear turning point. We're no longer in a runaway appreciation phase, aka housing prices just going up, or at least staying steady. We're entering what some of the market experts are calling a little bit of a market reset. But here's what the headlines won't tell you. While the median price has dropped 2.1%, we actually sold, for the first time in a little bit, more homes. September saw 1,884 single-family homes close, which is up 5.2% from last year, where we sold 1,791 homes. So we have actually more transactions happening at a slightly lower price. So that's not a crash. That's a market that is starting to find equilibrium after years of being tilted heavily towards the sellers. The average sales price tells even more of an interesting story. It came in at $617,312, which is actually up, ready for this, 6% from August and up 3% year over year. How can the median price drop while the average price rise? That means on the higher end of the market, it's still strong. We're seeing what economists call, are you ready for this one? Okay, a bifurcated market. This is where we have different price segments that are behaving very differently. The luxury market in particular, homes above about $750,000 are still moving just at a slower pace. So according to this report that I guess called Reports on Housing Data, homes above 750,000 have an expected market time, of about 248 days. While homes in the market, like a lot of folks are living in, about 400 and 500,000, they're moving real fast. Now, let's talk about what's really driving the shift. It's the inventory. So this is a big story. We now have 7,502 single-family homes available for sale without any offers. I mean, that's at the end of September, of course. That's a staggering 37.4% increase from last year. To put that into perspective, in September of 2021, at the height of the frenzy, we had just 3,463 homes available. We've more than doubled the inventory since then. This surge in supply is what is giving the buyers that negotiating power for the first time. I'm not even going to say years, I mean like a decade. With this inventory level, we now have a 4-month supply. Real estate professionals generally consider 4 to 6 months a balanced market. Under 4 months traditionally favors a seller. Over 6 months traditionally favors buyers. At exactly 4 months, we're right at that inflection point. We're no longer in a seller's market, but we're not in a buyer's market either. We're in theory in transition, but let's be honest, people ain't used to this. So we may as well call it buyer's market. It's been a very long time since we've had something like this, so people ain't used to it. That's right, I use the word ain't. The condo and townhome market is showing even a more dramatic shift. The median price for condos was $294,000. That was down 1.8% year over year. We sold 485 units, which is essentially kind of flat compared to last year, but inventory jumped 50.5% to 2,605 units. That gives us 5.4 months of supply, which, yeah, that's solidly within buyer's market territory. If you're a first-time buyer looking at condos, you have a significantly more leverage than you did a year ago. Let me give you some context by looking at where we've been. In September of 2020, during the pandemic, the median price was $337,250. By September of 2021, it had rocketed to $406,500. That was a 20.5% gain in a single year for single family housing. Then, by 2022, as mortgage rates had doubled, the median price hit $250,000. But sales volumes collapsed by 37%. The market essentially froze. In 2023, prices stayed flat at $450,000 as buyers and sellers adjusted to a new rate environment. Last year, we already talked about it, prices climbed to $479,900, and now, we're down to $470,000. Over a 5-year period, prices are up 39.3%, but the bulk of that gain happened between 2020 and 2021. Since hitting the all-time high of $485,000 earlier this year, we've pulled back 3.1%. This isn't a crash, this is a correction, and it's a healthy one. In 2021, the market was unsustainable. Homes were selling in days, if not hours, often with multiple offers well above the asking price. Buyers were waiving inspections and the appraisals. There wasn't a functional market. What we have now, let's just be honest, is more rational. Speaking of how long homes are taking to sell, only 50.2% of single-family homes sold in September went under contract within 30 days. That is down from 61.5% last year. That's way down from 83.8% we saw back in September of 2021. For condos, only 46.4% sold in 30 days, compared to 59.9% last year. Homes are sitting on the market longer now, which means buyers have time to think and to negotiate, to get inspections that are done properly. That's how a normal market should function. Now, let's talk about what's actually selling and who's buying, because this is where the data gets really interesting. Of the 1,885 single-family homes that sold in September, 47.6% were financed with conventional loan. 20.9% were cash purchases, and 19.2% used FHA financing. And of course, my favorite, 9.4% used VA loan. That 21% cash buyer rate is significant. It shows that there are still some strong investor activity out there and buyers with substantial resources. But it is down from earlier in the year, suggesting that cash buyers are becoming way more selective. For condos, cash buyers made up 31.3% of all of those purchases, which is notably higher than single-family home. Investors see values in the condo market, particularly with prices down and inventory up. Let's talk about what buyers are actually purchasing. Of the 2,424 homes sold across all property types, 45.9% were single-family homes. Only 19.2% had pools and 13.7% had spas. About 35.3% were in gated communities, and 77% had HOAs. These numbers matter because they tell us what's available and what buyers are choosing. If you're selling a single-story home with a pool in a gated community, you're in a much better position than someone selling a two-story home without amenities in an area with high HOA fees. There are also significant geographic differences within the Las Vegas Valley. Henderson, those homes sold for a median of $530,000, which is 11% higher than the overall Las Vegas median of $477,250. North Las Vegas came in at $420,500, which is 12% lower than the Las Vegas median. If you're a buyer trying to maximize your purchasing power, North Las Vegas offers substantially more square footage and newer construction for your dollar. If you're a seller in Henderson, you're still commanding a premium. One of the most important things I want to emphasize is the hyper locality of this market and how it's become. You know what? I've watched several other Las Vegas real estate videos to see what the other agents are saying. And one of them broke down the inventory by specific communities, and some neighborhoods like Silverstone Ranch have 12 months of inventory. That is a deep buyer's market. Sky Canyon has 10 months. Southern Highlands and Spring Valley have 7 months. But then you have communities like Green Valley Ranch and Caden and Lone Mountain with only 3 months of inventory. These are still sellers markets where well-priced move-in ready homes getting multiple offers. The overall valley-wide statistics don't tell you what's happening on the specific streets. You need to work with an agent who knows your micro market. Let's talk about the mortgage rates because they're the single biggest factor to influencing the market. As of mid-September, rates are down to about 6.37% according to Mortgage News Daily. The Federal Reserve made its first rate cut in September, and more cuts are expected throughout 2026. The major forecast predicts that rates will drift down to about 5.9%, 6.5% range by the end of 2026. That's not the 3% rates that we had during the pandemic, but it is a meaningful improvement from where we were. Here's what the national data does tell us. According to Keeping Current Matters, housing inventory across the United States has been well above 1 million active listings for 5 consecutive months now. That's the first time that's happened since the winter of 2019. We're seeing a nationwide normalization of inventory. Nationally, 20.3% of listings had price reductions in August. In Las Vegas, that number is even higher. According to reports on housing data, 45% of homes sold in August had to reduce their price before finding a buyer, and 73% sold below their original listing price. Only 13% sold above asking. Let me be very clear about what this means for sellers. The days of pricing your home aggressively and waiting for buyers to compete, those are over. You need to price correctly from day one. I saw the data that 20.7% were pulling their homes off the market without selling. That's more than 1 in 5 sellers who couldn't get the price they wanted and just gave up. Don't be that seller. Work with your agent to go through a comparative market analysis. Look at what is actually selling, not what's listed. Price competitively and make sure your home is in excellent condition and be prepared to negotiate. For buyers, this is the best market we've seen in years. You have choices. You have time. You have leverage, but you still have to be strategic. Get pre-approved so you know exactly what you can afford. Work with your realtor to find a great lender because, I'll be very honest, some of these lenders, once you get that pre-approval, they want you to be with their realtor because they want to protect their loan. Don't wait for rates to drop to 5% before you think about buying, because if rates drop significantly, you'll be competing with a flood of other buyers and prices will start to rise again. There's an old saying in real estate, marry the house, date the rate. Buy the right house now and rates will drop further and then you can refinance. And I know there are some people who are especially hating that because rates have not dropped in years. Let's be honest. They are going to drop at some point. When that happens, it could become a bloodbath. And this could be a very good time for you to buy. But of course, you know, everybody right now, somebody's going,
You realtors, you just want people to buy right now, and that's all you always say that.
yeah, realtors do always say that. Lenders always, anybody who is makes money from buying and selling houses is always going to say that. I'm going to tell you that right now. Go ahead and type it in. One thing that should give everyone confidence is the health of the underlying market. Distressed sales, foreclosures, short sales that make up, check this, under 1%, 0.66% of all transactions. 16 homes out of 2,424. That's it. During the 2008 crash, distressed sales made up 50% or more of the market. Are we anywhere near that? We're nowhere near that. According to reports on housing, 99.4% of all sales were from sellers with equity. That's called cashy money. People aren't being forced to sell. They're choosing to sell. And they have equity to work with. That's called a fundamental healthy market. The Las Vegas economy is also showing resilience, though there are some concerns. The unemployment rate in August was 5.6%, which is higher than the national average and the fourth highest among major metro areas. The local economy is still heavily dependent on tourism and hospitality, and there are concerns about potential recession. But unemployment remains strong at 1.14 million jobs, and people are still moving to Las Vegas. Now, if you're feeling ready to explore your own slice of Las Vegas, or simply want to talk through your specific situation, don't hesitate. Reach out for your free personalized consultation call or download your free Las Vegas relocation guide. The links are right down in the description. I'm here to help you find that perfect neighborhood and avoid any costly mistakes. From my military brothers and sisters, you know the drill, Alpha, Mike, Foxtrot, everyone else, thank you for being part of this community. I genuinely appreciate you, and you know we're always going to keep the lights on for you here. And real quick, YouTube has that new hype button below. Do me a favor and hit it so more people can discover this. And remember, there's always more to learn about making a smart move to Vegas. Go ahead and click on that next video that is suggested by YouTube. I'm going to meet you over there. See y'all.